Welcome to the channel, my friends. Thanks for tuning in. As always, today we're going to get into predictions and what we think is going to happen coming into the end of 2022, going into 2023. That's a lot of 2020s. So we're going to get into it. We are real estate agents out here in North County, San Diego. I'm Chris Erickson.
Warren Sanders.
And we're with the Beach Life Group right here in North County. So we're out there every day. We're working with buyers and sellers, let you know what we're seeing. But we're going to show you some charts as well and kind of dive into the numbers behind the charts, let you know what's going on, what we're seeing, boots on the ground. So we're going to give you an idea if you're thinking about selling your home, what's actually happening. Because most of the stuff you're probably seeing is national level, all these news articles. Some might pop in San Diego here and there, but for the most part, you're seeing national news when really all real estate is super local. So we're going to get into a few points and let you know what's going on and what we expect to happen for the rest of the year. So let's jump in to the charts. Prediction wise, well, first off, nobody has a crystal ball. So my crystal ball is as broken as anybody else's. But we do, when you decide to sell, one of the biggest things is knowing what's going on right now, how to price your home, what is the current market condition. So that's like the most important thing. But as far as kind of the big picture, here is a good comparison. Interest rates to the market action index, or how's the market. And we get that from Altos Research. They do some really good data over there, pulling it. The numbers that you see below on that bottom graph are actually from Carlsbad 92010. We have them for all of the different area codes, but it's just kind of showing the inverse relationship between, as interest rates go up, buyer demand has gone down quite a bit. So until that changes, until interest rates kind of even settle in where people know a little less uncertainty, I think we're going to kind of see buyer demand stick where it is, maybe even drop a little bit, because a lot of people have, a lot of buyers wise, have been priced out of the market or just been uncomfortable with the payments they can get. So Lauren, what are you seeing?
Well, there's a lot of scary stuff out there. So if you watch the news, there's talk of recession now, pretty heavy talk of that. Interest rates have been moving in the last month significantly. Mortgage rates are probably up a point in the last month, which is pretty significant. The 10-year bond's up like 3/4 of a point in the last month, which is what mortgage rates are based on. Mm-hmm. So that's kind of that double where you see it peak and then drop down during the June-ish period, June to July, and then all of a sudden in August it started moving back up. So, we know rates have an effect on home values over time because it's a function of what the monthly payment's going to be for most people. So, and that's up 30%, 40%, depending on where you look, around here versus a year ago. So, yeah. But the one thing that I think the biggest thing to keep in mind is those rates we had for a year and a half or a year I've never seen them in my life. I don't know if we'll ever see them again. And so, we had this brief blip. So comparing against that is going to be always difficult. Where we're at now is while it doesn't feel normal, in the 4.5 to 5.5, 6 range is probably a more normal mortgage rate. It's significantly lower than when I started buying houses. There's a lot in there that the market action index is pretty good because it's a current. It's like every week the numbers are changing on that. And we've just seen a steady, since the beginning, I would say April-ish, after tax time or around there, we start seeing it decline from the 80s to 90s, depending on your neighborhood, which was a strong seller's market. And now we're in some markets, we've actually flipped in a bit of a buyer's market, but most are still in a seller's market.
And then predicting so the Fed doesn't directly control the interest rates, but every time they do raise interest rates, a lot happens with all the different, like Lauren said, the 10-year treasury kind of is a better indicator of where potential interest rates are going to go. So even though the Fed may raise the rates, the last 2 times, actually, even the time they just raised it this week, rates went down a little bit. Now they're up again. But nonetheless, until the Federal Reserve, who controls kind of that base rate, changes and starts bringing them down, I think we'll kind of see these elevated levels. In turn, meaning a less buyer demand out there. until they get settled into a place where you kind of see a flat line. So this chart here is even just 1 year. So the bottom is like at that 3%. Now we're at 6.62, which is even, I mean, that's more than double over, just barely over a year. So, and here's
we had people locking it in the lower 5 range, a month give or take ago that are closing now. So that's a big difference, $300-400 a month in somebody's payment, a couple $100 in somebody's payment at least.
With elevated prices too. So we'll kind of get into that in a little bit, but projection wise, you can see this is kind of at the end of last year. So December 2021, and what everybody was thinking, Freddie Mac, all the big players, National Association of Realtors is NAR at the end, what they expected to go through the year. So you can see we're kind of in 2022 Q4, that last one, everybody was expecting to be right around like mid 3s. Now we are mid 6s. So it just kind of goes to show you, even people who are in the game, who have a ton of data, who know exactly what's going on, they get it wrong a lot too. And
most of the time, actually.
Most of the time. That's why it's so important to kind of know where you are right now and set that story to, plan ahead, obviously, but plans change. So get the information, like if you are thinking about selling right now, what's happening directly in your neighborhood right now, what's going on. Here's a little updated one of what they're expecting going into 2023. So NAR, National Association of Realtors, is expecting to be at that 6%. Obviously, we're already over that. But
I think NAR just gave up. They just put 6
they didn't even put one for Q3 in 2023. They said, nah. It just goes to show you projections out that far in advance. There's a lot of moving parts. Nobody really knows what's going to happen. So just take that all with a grain of salt. Coming into this next slide, have we peaked projection-wise or prediction-wise? Obviously, this chart shows that we have, and you can just feel it out in the market too. So if you're a seller and you were looking for that top dollar, it might not get that anymore when we had crazy buyer demand and a ton of people looking at properties and a ton of multiple offer situations pushing that price up. This is the median price in San Diego County. And you could see it kind of peaked in about 3-4 months ago, and it's starting to come down. So year over year, it is still up, meaning compared to last year. This is San Diego County as a whole, because a few different neighborhoods, a few different cities like Valley Center is actually down year over year. Carlsbad 92010, the Calavera Hills kind of section of Carlsbad, is actually down year over year, that median sales price. So you can see kind of where it's flat, 2021. That was kind of the end of 2021. You can see it's kind of trending down there. So,
I mean, think about this though. In 2016, we're at 5.25 or so, and then we get up to 960, 970. I think it was 985.
Yeah.
In 2022, so 5-6 years down the road, that's a pretty hefty gain. So, and if you take that chart back 2015, go to 2009, it looks similar to from 2015 to 2018, 2019, with kind of a steady rise up, which is very healthy for the market and more stable. And things just are, it's a better mix of buyers and sellers. All those things make for a better long-term market. In the past 2 years, we had this anomaly that took it, to a completely different level. And so there's got to be some, just naturally the way things work in life is there's going to be some adjustment from that insanity, and probably bring it back closer to the norm. Although, there's a lot of conflicting data. What's our next chart?
Next is the appreciation. So this is from June. It's funny, real estate numbers, a lot of them, Altos is weekly updated, but like all the numbers we get from NAR and all our realtor associations are a little bit backward looking. But you could see this appreciation acceleration, or in the cases of the red ones, Portland, San Diego, San Francisco, Seattle, deceleration month over month. So prices actually fell month over month back in June, and we've seen that continue into these next coming months, or into the most recent months.
Right. So the chart on the right's the kind of the previous, taking us from 2001 through the previous bubble, and then kind of that what I was talking about, the steady rise from 2009-10 up until 2019, the 2020 time, where it just kind of, you could see that rocket ship off. So that's when people started talking housing bubble.
Yeah.
And, I mean, if you just look at the charts, it's pretty scary.
Yeah.
The challenge is, I saw something recently from Gary Keller comments at one of their meetings, which he's been in real estate long, 40, 45 years, huge company they run. And, I think his basic statement was, it's more confusing now than it's ever been to try to understand the market, because there's these cross currents. Like, if you just look at that, you go, man, we're in for a big drop. Although when you factor in, there's not enough inventory still. Rates overall are fairly reasonable. Not that they feel that right now, but overall. And the amount of money people put towards their house right now versus what it used to be is actually still less to a degree than it was. I think at some of the peak times we had like 35% of your income went towards your mortgage payment, your housing costs. We were down to 25% or so. And that's the number I would follow probably as a closely, try to figure out because at some level that does peak out. People can't go higher. Yeah. Well, they can't qualify, most of them, over 30-something% on your, the ratios they use for mortgages as well. So, and
then coming into this next chart, just home price forecast for 2023 from all these big entities: Fannie Mae, Freddie Mac. Once again, NAR, Zellman. She's Ivy Zellman. She's got a firm, I guess, big housing data, all that kind of stuff. Yeah.
Yep.
So she's predicting 3%. This is national, 3% down next year.
And she's the lone wolf there.
Yeah, exactly. Yeah, she is. And it's, like I said before, it's all super local, what's going on in your neighborhood. So, you can look at all this stuff, but if you guys actually had real questions, just reach out, hit us up, and we could get those answered. But because it's different, like even like I said, running them earlier, a lot of like Encinitas is up like 15% year over year. That section of Carlsbad is down like 4 or 5% year over year. So it just varies widely depending on where you are and what you're going and what you're doing. But key takeaways: there are still buyers out there. Homes are still selling. Looking at our hot sheets, we're seeing homes come on the market. We're seeing homes sell every single day, go pending. Like I said, just be cognizant. Prices are not as aggressive as far as what they're getting. So percentage of what you're getting has gone down under 100%, which it had been well over that.
Started dipping again too.
Yep.
We might want to mention that too. So that's why I said there's a lot of cross currents. So it's hard to get a beat on what's going to happen in the future because of those.
Yeah.
And so looking at what's currently happening, like you're talking about, is the most important thing. And the whole, I saw some article in the San Diego Union, I think it was, that was like, is now a good time to sell? This is such a stupid question to ask, because in general, it doesn't matter unless it's a good time for you to sell.
Yeah. It all comes down to
trade stocks or something. Is now a good time to sell? Well, it would have been a great time to sell your stocks in January. You don't have to move out of your stocks. So
but there are still buyers in the market. We're going out.
Totally.
Cassidy, another member on our team, he's out today, going out Sunday again. We have a few different clients in town. Like, there are still people out there buying homes, and the market is still moving. Might not just set expectations. I would say, if you are a seller, just don't expect kind of the frenzy that we had seen, or any of the stories. If your friends were talking, they sold their house and kind of their whole story. It's a different story now. So it's a different market. It changed. People say real estate moves slow, but this one has moved fairly quickly. So going forward, a few other things. Pricing is going to be super important, as always. Just really take into account the other homes that have sold in your market. Make sure you're dialed in, not getting too aggressive, but it really comes down to your situation.
Don't go too far out on your comps too, because if you're looking at a comp from March, April, May, it's not that anymore.
Yeah.
So you really got to get them as close as you can to 30 days or so. If you're using older ones, you're going to have to adjust your sites based on where those are to some degree. So
and also
a little longer. compelling price. If you want to sell in this market, you need a compelling price, because that's the thing too with buyers. Some of the buyers we work with, but also buyers that come in on listings that are interested. If there's not a compelling reason to write an offer, they don't. They might want the house, but if their feeling is, well, it's still overpriced by 5%, it's going to sit. So we don't need we don't need to hurry.
Yep. So pricing is super important. Preparation, as always, get it dialed in before you put it on the market. Give yourself the best look at that you can. So when people do come in, they are excited about it, can see themselves living there. So the two things you can control, price and condition. So super important going forward. If you guys are thinking about selling, you have some questions, you want to get some questions answered, hit us up, call, text, email. We got your back when moving in and around North County, San Diego. We'll catch you guys all on the next one.